good to see as well. Okay, so what is the current situation? We still have the same main range where we have been in, which is technically this range where we had 1, 2, 3 broke structure back to bullish, and since then the main objective has been the range high to take it out. However, in the meantime we formed this new local range where we are still in, and with our start of the range, so range high, range low, and since then we have been forming higher lows and higher highs. So we took out the high here, came back into the 0.75, and from there we pushed higher again. So basically since last week we have been watching for the scenario where we have either bullish continuation of our bullish trend, in which this could still be a higher low, because only on the lower time frame this is structure, but on the 4 hour this is still our structure low. So this could still be a higher low eventually for a higher high. So we have the market structure scenario, which is more pointing towards higher, towards the range high, which is still intaken at 67k, and we have the internal bearish PO3/Model 1 distribution idea, in which this is our tab 1, this is our tab 2, this is our tab 3/ the range high deviation, and then since last week we broke hourly structure back to bearish, gave that extreme range high retest before selling off further in the range, where we have a full acceptance back into our volume profile as well. So here you can watch our volume profile is currently located at this level, directly at our range high, which is a very solid level to have your value area high. And then after we broke back in the range, we retested it here, sold off, came back towards the point of control, and then during the weekend we have seen a slight slowly price pulling back up, once again retesting this key level right here, which is our range high and our value area high. So if we put on the volume profile again, we can see that this morning, let's go to the lower time frame, that we once again retested this supply that was taken out last week. So here we retested a key level. Exactly at that level, bears stepped in to push price fully back in the range, and right now we have seen basically exactly the same, where we came into this extreme level, which is the value area high. It is extreme supply of this breakdown, and it is the range high level right here. So we can see that price tested it here, formed higher low, then right here we made one more high, but we swing filled our market structure high, so we wicked it instead of closed above it, and now we are holding below it. So we have a pretty key region here where we once again for the bears have a super clean invalidation, where if the bears want to push price lower, this is now their invalidation. You can always wick it. For example, price could make one more new high during New York and then sell off. Then we have like a model 2 locally here on our hands. But overall, this is a zone bears want to defend to get that rotation back to the other side of the range, which is basically right here, because this is our internal range within the bigger range. So right here, the target for this bearish PO3, if it plays out, is the range low right here, 61.5k. So coming days, it's going to be super important to see if price stays below this level. Then there is a lot of sell side liquidity, because only during the weekend, if we zoom in, let's clear up the chart a little bit. Then we can see that we had that super strong sell-off on Friday. So super strong sell-off. Then price just front ran this liquidity low. And since here, price has been slowly grinding up during the weekend. So you can see we made a higher low here, did not sweep the initial low, which is always a stronger sign if you do sweep it. And then from here we have basically seen this slow grind up, not leaving any clean demand zones behind. Because if you strongly trend up like this, then you create demand in the process. And then if price retests that demand and pushes again from it, then each time you create demand on your move up. So that is a strong, healthy uptrend. This is the opposite side, the opposite of a strong uptrend. Because you take out all, even like small demand with those retests. And right here you basically don't create any demand because you don't have strong pushes higher. This is all liquidity right now. So the only thing protecting this sell side liquidity is basically the little demand we have right here, which was created yesterday evening, where this was a strong push, so that left this demand zone behind. So currently we have few very interesting levels, which is in my opinion this level for the bearish idea, which you want to hold. So then you want to see either like a model 2, locally 1, 2, 3, or that model 1, where you sweep the high once again and then break low time for structure. Or if we flip it, then we could squeeze quite a bit higher, because in that case the range high already got tested here. Right here it got tested once again. So this is clearly a level that bears are trying to protect, but if they fail to protect it and bulls reclaim it, so let's say we maybe do this, get back above, then this level is a super clean resistance into demand. So bears defended it all the time. If they now flip it, then it can squeeze very quickly into this resting liquidity, which is also all consisting out of lower highs, which was basically that local downtrend we played last week. So whatever happens, we have super clean levels. If we flip it, then new weekly highs are very likely, and then the PO3 is fully invalidated. But as long as this zone holds, there is a lot of downside for the bearish idea, because we only have this local demand. But if price fails to hold right here, then as explained, this is nothing. So then you can flush very quickly, and then we are fully back in the bearish PO3 idea. And then below, basically below this local demand we have created, there is only liquidity. So locally we have this, which is very poor sell side liquidity, also weekend liquidity, and market never likes to leave weekend liquidity behind. And below this there's only liquidity as well. So in my opinion, if bulls want to step in, they should protect it right here, otherwise there is a lot of downside. So very interesting levels to keep an eye on. If I had to personally take a trade right now, I would be looking for shorts, purely because your invalidation here is super clean. So and for the long side, where are you gonna put your stop? So either I would be patient, or I would watch for more price action, or play this as a local range, in which we can technically draw a range right here and see this as our tap 1, this as our tap 2, and then this is a local range, in which this is our extreme supply. So in case you push into that level and get a bearish breakout structure, you can look for a model 2 or model 1 by taking out that high. So yeah, I think for coming week, super interesting levels, where we soon get a decision. Either this high holds for the bearish idea, or this demand holds for the bullish idea. One more scenario I can also see is that we do not get a full rotation to the lows, but that we sell off. Like I've talked about, this liquidity, I don't trust this. This has to be taken, in my opinion, for a healthy move higher, because this just looks super poor. And it's also weekend liquidity. They never like to leave weekend liquidity. So I really think that even if this eventually goes higher, that we first have to wipe out all that liquidity, then maybe have a strong sell-off early in the week, take out this liquidity, where we have this low and then these two higher lows, clear that liquidity, then break structure, and then from here start pushing upward. But for now I'm more short biased, and I think we have big chances to hold this high and grind lower. So yeah, you can trade that multiple ways. Either you can wait, or you can have a short with your stop above that high and then target it right here, which would also be like a 3R. Invalidation super clean, because if you push above this level, then in my opinion you can quite easily flip into longs targeting higher. So I always like to do business at inflection points where it's either this or that, and in my opinion this is such a zone, just as last week where this was also such a zone, where you either hold, you take out this level, sell off, then your invalidation here is super clean, because that is the level you want to defend. Currently we are almost exactly in the same situation. A lot of liquidity below, extreme level taken. It's either from here down or not. So you can decide for yourself how to act on that. Let me read the chat. I'm bullish also because the way alts are behaving. Yeah, I would be always careful with, because the way alts are behaving, because often they can directly use alts to push it higher, and then people get bullish, and then Bitcoin shits the bed, which is more common than not. Because always when you think, oh, alts are doing well, they are going, Bitcoin shits the bed. So for me, Bitcoin is always the most important chart. Last key for my Tau is short and bearish. Yeah, I'll go into that in a minute. Let's first look at USDT, which is also at a key point. So we are still in this bigger range, where we just front ran that range low sweep last week, and from there we have this local structure which looks pretty explosive, with that 1, 2, 3 drive, bullish internal break of structure, and right now we are at a key level right here, where we have a lot of sell side liquidity below us, which directly will send price into the range low. But we also have here locally some buy side liquidity as well. So we are basically stuck in the higher time frame bearish structure, which is this one. Lower high, lower low, lower high, lower low, where this could be the new lower high before we get the move into the lower low and therefore take out our range low, which will still make a lot of sense, because eventually your range high and range low are always magnets. So it would be a nasty move if they just front run it right here before taking it out. So either we have this bearish move that continues into the range low, or we have the local bullish trend which flipped right here, low, lower high, lower low, and we now have high, higher low, higher high, and currently price is here struggling between either swing failing this internal market structure low. If it holds, like right now it is an SFP, another SFP, so this could be an SFP. If you then break internal structure back to bullish, this high becomes your weak targeted high again. And then we are at an inflection point where either the lower high continues, or you break this lower high sequence and then you have like a big reversal. So locally, what is gonna happen here is super interesting. So let's zoom in a bit. Like so far it is structure on the 4, not on the 6. So on the 4, so technically you can see it as a break, but I would not confidently say that this is a break. Okay, so here we have some supply. This is our internal structure, low, lower high, lower low, lower high, lower low. So this is our market structure level to watch. So right here we have basically this scenario, and directly below us this. So either we get a confirmed break right here, then go back to the lows very quickly because there's only sell-side liquidity below us, or this was the SFP, we break internal back to bullish, then the high right here is our target. So also here, very interesting level. Right here it looks a bit more bearish to me compared to the Bitcoin chart. At least this looks, might be a bit more likely to go to the lows to clear this liquidity into the range lows. But for Bitcoin I'm more bearish. I really think, or at least from a trading perspective, I think shorts make way more sense here. Simply because your invalidation is super clean. And you have this liquidity. So locally, this is going to be a decision point where either we hold this demand and then make like a second tap here where you can potentially get a reaccumulation. This would flip me back to bull. But if you do not hold this, in hindsight you will think, damn, this was such an obvious short. I should have taken it. Let's quickly look at the, first of all, at the stats. I haven't looked at the stats. Yeah, so doesn't look like a bullish day. We are, it could still be, but you see that we are at lower bands. So it looks more like a bearish day, how it's behaving. And especially if we start taking out the low, you can also see 80% of the bearish days had the high in by now. So that is once again, just as like last week, where this is from a technical perspective a super clean invalidation, but also from a statistical point of view, it clearly shows that if today is bearish, then 80% of the days had the high in by now. So then you come to that exact same high, where it will be super unlikely to take out this high again and then still have a bearish day. So if you're bearish, this high is super clean invalidation. However, on Monday I often don't pay too much attention to stats yet, because Mondays are very manipulative. So they often push price in one direction purely to manipulate people and then reverse it the other days. So let's have a look at the order flow. This is basically that deviation from last week. We retested the daily point of control right here. Sold off. This was the short we took. And right now, what I always love to do is to look at where is your liquidity. And basically, daily point of controls are liquidity, which are eventually always get taken. So, for example, right here, we had a daily point of control, wiped out, and then we reversed back to the highs. Last week, we left behind a daily point of control right here. Directly taken, strong sell-off. If we look at the current profile, then where is your liquidity? On the upside, we don't have any TPOs. We have already taken out every level right there. And on the downside, we have multiple levels, which are these levels right here. So this is a daily point of control untested from Sunday, yesterday. And we have one below from Saturday. And then we have one further below, which is this one from July 17th. But that to me also adds to the view that I think lower is more likely until proven otherwise. So either this high holds and we at least take out this weekend liquidity, because now we have daily point of controls, naked daily point of controls, plus weekend liquidity, and no good structure at all. So like if you take out that low, then you already have a much stronger bottoming formation. Right now, this is super weak. This is asking to be taken. So also based on this, I think at the minimum, a clearance of all this weekend liquidity is needed if we want to make a healthy move higher. But I'm also easily flipping bullish. If we hold here, retest this local demand, and then flip structure and then take out that high, then I think we are very likely to squeeze into these highs. So we'll be flexible, but for now I think it's much more likely that we have a strong high on our hands and that we're going to take out this sell side liquidity at least. But yeah, it's a Monday, so it can go both ways, but for now it's moving in the desired direction. Let's see, alert there, and alert right here. Then have a look at some alts. So Sol is still in the same range as, so zooming out, we have this weird mega range. I don't really like it as a range, it's looking weird. But locally we have this local range where we are also trending down. So we have lower high, low, lower high. Technically low, but I would take it from here, lower high, and then lower low. So this could also still be from this macro trend, just be a lower high for lower low. So that could also still happen. And more internally, we have this range, low, high, sweep, front ran the range highs, and then we broke from last week, broke back to bearish. We had equal highs, so the structure there, I'm not sure if, I don't think we took the high, so but essentially we broke it back to bearish right here. And then also, if we look at the structure here, this is super weak. This is not how you want to build good lows, and especially not if it's a weekend liquidity. So price came here, front running your range low, again, take your low, it's much stronger, but then it started to grind higher. And here we have a little bit bigger pushes compared to Bitcoin, in which technically these are little demand zones, but I only value this highest demand zone, basically, because I think if we lose this demand, then I don't really see this as demand. It's more liquidity to me. So that's the same situation as Bitcoin, where if we do not hold this zone, I expect a very quick rotation back to the lows. Because also here we only have weekend liquidity, and this is super poor. Price here came back for that supply. So if we pull the range from that high to the breakout point, then this is basically your highest probability bearish retest. So we came into that upper part, but we have liquidity a little bit higher. So if we start taking out the high here, for example, then I'm super interested in a short towards the lows. On the other side, if we have a too clean to ignore reaccumulation here, then I will be interested in longs back to the range highs. However, I don't here. This is to me just asking to be taken. So it's not. Also, if you look at it, could this be a Model 2? No, in my opinion, not, because we have just a way too aggressive move down, and then from here, if this is your structure to build up on, this is not how big players can fill their orders. They will never do that this way. They want to have price stay stuck there, wipe people out, and then fill their own orders, and then they can reverse it. And not like this. This is just, it might be more likely that these were shorts that getting squeezed, because maybe a lot of people turned bearish right here, started entering shorts in the downtrend, and then this is just a little squeeze without real buying, but every little bounce triggers a new short position that gets wiped out. That short is buying pressure, and then you get these weird slow moves up, which is basically not healthy buying. So it's not strength, but this is just shorts that getting squeezed till they are out, and then can continue. Also here, I don't know, I feel more bearish than bullish, but I know a lot of people are biased differently, but I will always follow my own bias. And it can flip also around. If we start reaccumulating here, I will flip, but for now I think what I see is just strong down. This can simply be a lower high for lower low, weak liquidity. Main structure is still bearish, so in my opinion most things point lower. Although some alts did make good moves, but yeah, to me this doesn't look too good. Same for hype. This is just asking to be taken. This, I cannot see a situation where this is the bottom. That just makes no sense to me. So also here, if I'm eventually bullish, I want to see this be cleared. Right now I would not even be surprised if this is like a little bearish PO3. It's not a good range, but yeah, to me it looks just very, very weird. And also if you look at the location of the range, would they reverse it right here while you have super clean demand below you? And if they do that, often they will get some okay, now it's getting interesting. Bulls now want to defend this zone, otherwise we are going for all that weekend liquidity. Also, if we look at the structure, so we basically have a bearish range because we have a naked low and we have taken out our range high. Not a clean distribution because we don't have a third tab, but we basically have here a sweep of our range high and then an internal model 1 / bearish 3 drive. So this is distributive behavior. Right here you wick your high, it's first signs of distribution, and then internally you have a model 1 / bearish 3 drive right here. So that are all signs of distributive behavior instead of accumulative behavior. Just as this, where you created these poor higher lows, that's also distributive behavior instead of accumulative behavior. Take out those lows and it's accumulative. This is weak, that's just asking to be taken sooner or later, which is basically the same as we are doing right now. Here we sweep the lows, so that locally you can say it's more accumulative, but the time distance between it is, in my opinion, not good enough. And if we just pay attention to structure, which is always most important, then we swept our range highs, we had internal model 1 distribution, and if we look at structure right here, we have just a bearish trend, where this, until proven otherwise, can just be a lower high, can even come up all the way here for a lower low into our range low demand. So also here, I think it makes no sense to reverse. And then strongest point for that is that liquidity, what we have right here, which is super poor. And we came into this supply, so we are now rejecting. Technically, structure is still bullish right here, because locally, like you have this all liquidity, but locally we have high, higher low, higher high, higher low, higher high. So this could be a higher low for a higher high. But yeah, this structure, this I would not dare to take a long. I could try it, but I would. If I see this, I only see liquidity, and big players always play with liquidity. So I would, if I was a market maker at least, I would definitely start taking out this liquidity before reversing. So then counting all points together, where we have a distributive range, clearly distributive behavior, bearish market structure, we have not taken extreme demand, then I would say, in my opinion, probabilities are higher to eventually take out this liquidity. So then I would not be really interested in longs here, whether wait for shorts to develop. Tao is high time frame getting more and more interesting, where I think eventually we will take out this low and probably also this liquidity right here, and I'm kind of trying to manifest a move, like I don't know how it happens, but manifest a mitigation of this range demand, break structure, and then I think this is a generational buy opportunity on Tao, because I think this from here has legs, like that's why we are in crypto, to make take advantage of these opportunities that come once in a few years. And I truly think that Tao is one of those. 1, 2, 3, anything around here, I think mega opportunities. But therefore I think eventually this will go lower, to at least take out this low, but probably also lower. Then we have this potential local range where we SFP'd our low. So then if we look at it from a structure perspective, we have like low, lower high, SFP, Step 2, but also an SP, an internal bullish break. So our weak targeted high is the range high. Simple, because we have an SFP. So therefore we could get a move towards the range high. However, that does not have to happen in one go, because we can also come back down first, and then this could turn into a model 2. Because market structure is the strongest, and we have an SFP right here with an internal clean bullish break. So then we know, okay, this is our weak targeted high, and we have potential model 2. So could we get a move, or expected is to get a move into that range high. But locally we have the opposite, where we have a range. We SFP'd our high, came back, SFP'd the high once again, aka a 3 drive, and also, yeah, this is a deep move, so you don't have really good structure, but here you also broke structure. So to play out this distribution, technical target is the range low, and then directly below it we only have these big imbalances. So dream scenario, well, right now it's too late to short, because I think if it's bearish, this is already the bearish retest before going lower. But if this sells off, I am definitely interested in a long to play the model 2, which is the slower eventually the pullback is, the better. But our extreme demand is basically this zone, and extreme liquidity is this first higher low. So depending on how price comes back, I'm super interested in playing a long back up, because we have multiple confluences to get back to this high. So extreme demand first PY. Structurally, I would like to, because also here this is weekend liquidity, I would prefer for price to take the extreme liquidity, so this low, and then go back up. So that's what I'm looking at for Tao. In case price still comes back up, you have your extreme liquidity right here. So what could happen potentially is also get back up right here. If it follows this path, then I'm definitely gonna short it, because this is our model 1 into model 2 then. The bread and butter setup. So let's see. That's our Thailand Tao demand. yeah. Let's hope we eventually get it. Okay, so far price is wicking the low, but oh, that's what I wanted to do. I wanted to have a look. I already explained the order flow, but I also want to take a look at the this stuff. I don't know if it's interesting, but hopefully the drawings are gone. Yeah, okay, cool. Because this can also tell us some things. Get rid of the TPO. So, okay, let's see. This is last week. So here we saw open interest increase, then come down. Going up during the weekend and then selling off. Yeah, it looks more like, because here prices started to go higher and open interest is starting to decline. To me this looks more like shorts started to build during the weekend and then they got squeezed out with this push higher over the weekend. Remember, weekend moves are not to be trusted, especially weekly open moves. We have seen over and over again how the weekly open marks are weekly high or low. So I think this behavior, like here, this is where price started to squeeze higher, price higher, and open interest started from here to decline. So price going up, positions are not opening in the same direction. So it means that the positions that are open are getting closed out. Probably shorts that started building during the weekend have been used as liquidity to squeeze them out over the weekend. And then every short turns into a buy, in which you get that trigger effect, where one trigger triggers the other, and then it's a snowball effect till enough shorts are wiped out, and then you get normal price action, where you have to find a balance. What is the real value right now? In my opinion, lower. CVD, yeah, not really. It's just flat. Also not telling much. Okay, so not yeah. Only adds to the point that I think that this was a short squeeze and not healthy buying. Kijo manifesting a sweep of 183. Yeah, of this low. Yeah, that's also already very, very good. But also this, like, I don't know, this can also not be trusted. This is pure liquidity. And then that range demand below it. But yeah, I think anything from 183 to 150 or so is like a super good buying opportunity in the long run. Okay, last one. ETH. ETH was super strong. So we had that kind of model 1 here, but they tab 2 and 3 were really close. So they can be merged, and now price pushed into new highs, making it a super interesting situation. Because you can keep extending your range, but eventually you also have to keep in mind that it can also just be a bullish trend. But that is why I did like to trade ETH, is because it doesn't follow any clear rules. So for now, the only simple thing I have is that if price comes back, what structure do we have? So this is 45-minute structure. Then we have directly below it demand. But if it breaks 45-minute structure back to bearish and doesn't hold this demand, then it's likely a model 1, although it's not the cleanest. But like here, so it's not really a trend line, but you are building so many higher lows. Could this just be a model 1 before lower? I think if we get back below this level, then it's likely we get a rotation back to here. But as long as we are holding local structure bullish, this can just keep pushing. And then we also have a lot of liquidity to the upside. So also pretty decisional point, which eventually, in my opinion, it all comes down to what Bitcoin is going to do. If Bitcoin can flip this level, then alts are also going to be super bullish. But if Bitcoin is going to rinse all this weekend liquidity, then alts will also see some pressure this week. What kind of news event? I think we also have What do we have this week? FOMC or CPI? I believe it was Red News. Kijos shared it yesterday, but I haven't... I saw it FOMC Wednesday. Yeah. The FOMC is always a pretty big and important one. So that can also influence the markets quite a bit. Okay, I'm gonna take a look at H-bar. Because Daniel has been sharing crazy charts. I should pay a bit more attention, but I'm pretty busy with some other things as well. But I'm gonna have a look at it. H-bar. By the way, for people that are considering, we'll take the Binance pair, considering to start a challenge at Breakout, I think it's getting announced right now, or at least it will be at 2, so when I started the challenge. But there's now a special code, or at least the same as always. I will send it in the chat, code DDT Trading. But then you get for 24 hours 24% discount on your breakout evaluation, which is really big because normally they only give like 2% discount with the code, and now you get the 24%, which is big. It's like, let me see if it's already live. Yeah. So from now till tomorrow's stream, you get that 24% discount. To celebrate that they are going to, you can now trade Nasdaq as well, with 1 million notional, which is really big. So a nice one for people that are considering it. If you are considered to do it, it saves you 24% if you do it in the coming 24 hours. But you know my opinion on most prop firms and on prop firms in general. But I've been trading them lately, and it's paying off pretty well. So if you are looking for one where you can be sure that you get paid, then Breakout is by far the best. And in my opinion also the only one that is trustworthy. Like most others are scammy as fuck. But I know that Breakout is legit. And I don't make any, I make like 1% on the sale, so it's not that I'm trying to sell it now, because it doesn't really compensate anything. Okay, so H-bar had a nice accumulation here at the lows. From there it started to push very high up. So then you know that this is like a super clean accumulative range demand. So if you retest that, it can be a RIMC, aka range, initiate, mitigate, continue. Oftentimes price wants to retest that, so that is what I'm already keeping in mind as well, that if you are expecting like a new higher low, that oftentimes you retest at least the top of that range demand. So then reversing already could happen, but there is a reason for price to also go lower. Let's see. My evaluation feel like it's going on forever long. Yeah, so how I play it right now is to go full risk on the evaluation. So I buy a evaluation, I just go full risk with my trades, in which it's either I breach it or I pass it. Then you have to be willing to just take the losses, but like a 100k account, it's like the turbo one is $330. Let me quickly look. Yeah, 300, and then it can work. But then it's just breach it or not. But you can also buy the lower ones, of course. But then you can quickly get funded, and then you can stack those payouts. Like last month, I started doing that. It's going very well. Yeah, because otherwise you can be stuck in a challenge super long, and then when it's finally funded, then the pressure can also be big, because you know I've been battling a few weeks for that account, and then yeah, the pressure to make something out of it is pretty big, because otherwise if you breach it, it's also shitty. Okay, quick back to H-bar. First looking if we have some demand directly on top of our range demand. So right now we know that this is our accumulative range. We broke out of it. So often if price is truly bullish, you get a shallow tap and then it goes. So I see that we have some demand lining up directly with that range high. So then that is a big PY. So that one extended. Okay, let's see, what was it? Model 1. Yeah. Yeah, personally, I don't like these slow grinder downs if you are not in a high probability PY. So in my opinion, this is like a high probability PY, at least the top of the demand. But before reaching it, like this is more like a slow bleed down. And if you then look at every sweep from a potential accumulation, then if you follow the rules, you will not get an entry, because it probably also doesn't break structure back to bullish. However, this can keep sweeping like the lows over and over again. And the worst thing you can do is then try every long and get stopped out each time till you reach your high probability PY. And if you get your trigger there, then you want it. So if I see this, I personally think this can just grind lower till you reach this level. But let's look at the 5. That's why I often, okay, I see like on the 5 minute this looks much better. But that's why I always encourage to start on the high time frame, because like on the 55 I already, or on the 1 hour, I see that this is not, I don't like this price action. And that's always the most important, like where in the chart are you? And if you form a local range while tapping this demand, then it's a high probability environment. But forming a range here, in my opinion, is low probability. But on the 5 we can look, because it can always be a scalp for a tap and then back down. So if I see this, then I already see what you are seeing as well, which is the tap 2, the tap 3, and this is the bullish break. So then you have 1, 2, 3. You have a, or at least here, some good, or like good, pretty solid buy side liquidity, and you are creating demand right here with like your, basically this whole zone is demand, but like your extreme demand is now this zone. 1 minute, because fucking Siri is talking to me. No. So yeah, on the lower time frame it definitely looks interesting. It's also, let's see if the volume profile aligns. It is then technically, yeah. So you're also above your POC and vel. So then it can be a valid one, but context wise, I think it's a lower probability one, because it makes a lot of sense to reach these lower levels. But yeah, technically you have a valid tap 1, you have a valid tap 2, a valid tap 3, broke structure back to bullish within your value area low, created demand. So technically it is valid to look if this can tap into demand, preferably the lower part of demand, flip structure back to bullish, and then technically it's just a valid trade to the range high. And then what can also always happen is that you take the high and then come back towards those low levels. So I would look for the reaction, but yeah, right here, sometimes you just have to shoot, because like if you hit it, it can be a pretty quick, like a 3R trade. Like if it plays out, nice 3R, and you can take 2 losses in a row again. So sometimes you just have to shoot, but personally, often I have to see it on the high time frame directly if it's interesting or not. And then I would say this is a bit too counter trend. You have reasons to go lower. So personally, I'm not gonna trade it, but I can definitely see it work out. H-bar weekly doesn't look bullish to me. I'm still trying to understand the relations between a high time frame and low time frame. Yeah, it can definitely be a scalp, and technically it's valid, so I can definitely see it play out, but it can also get invalidated quickly. Let's quickly go back to the BTC view and try to answer Lisa her question. H-bar weekly doesn't look bullish to me. I'm still trying to understand the relationship between high time frame and low time frame. Yeah, high time frame and low time frame, it can be indeed pretty difficult how they operate, but to me, high time frame is always overrules everything. So that's why often it's best to go from high time frame to lower time frame, because using H-bar as an example, if I only see this, then I would say this is a high probability model 1, technically already valid because we broke structure. So then this is technically your invalidation. Your target is the range high. So then this is, you could say, okay, then if I long it here, stop here, target there, is it at least 2R? No, okay, so I'm gonna wait till we at least mitigate this demand, then it's a 2.7R, so then it's valid. But the low time frame can give a false image of what the situation truly is on the higher time frame. So if I delete everything and only keep the like this P&L, like the long tool, and go to like the hourly, and would see this picture with that long in it, then I would think, no, that's not a long for me. It will never be a long. And then the 1 hour for me is way more important than the low time frame. So I always watch high time frame, and then that's why I also started to draw in this range, because this tells me that we accumulated here with a model 2. So this is where market maker stepped in, accumulated price and pushed it higher. Right now price is coming back, but then the high time frame shows me where are we on the chart. are we in a clean POI, so clean demand, supply, or do we have like a clean range untested? Then on the high time frame, I think, okay, this is my higher probability POI. Then if we form like a local range, moving into that POI, and then show like accumulative behavior, where the third tab mitigates that high time frame POI, which you have 1, 2, 3, break, then I use low time frame in relation to the higher time frame. But not having the higher time frame picture in mind and looking at every local range as a potential accumulation range, then you will see that many will just never confirm. So then you're watching a range and instead of simply confirming it, it just grinds lower, maybe forms a new range, again tab 2, tab 3, and then tab 4, so it never continues. Therefore also almost never confirms your model. But if you don't have a picture of the high time frame, then the risk is that you are misinterpreting a accumulation for just a local downtrend. So that's why I always, in my opinion, high time frame gives you the picture. Then you can identify where are my POIs, and if you then get a like local range into those POIs, then I like to use like low time frame targets for high time frame completion, to say. But yeah, it's always a bit of a finding out what is the relationship between them. I also don't know how to explain it much better as this, but hope it's a bit clear. Then I think it's time to close off the stream. I think my view is pretty clean. For now, I'm leaning more bearish until proven otherwise. If today, let's see, this was there, we sell off further, and maybe even Tuesday, like today, tomorrow, take out this liquidity, then I would not be surprised if this was our weekly open manipulation to take out shorts. Then we move down to take all this liquidity to wipe out all the longs. And then I would not be surprised that this is our weekly low before reversing back to the highs, depending on where we form our low. But if this is Tuesday, and then maybe Wednesday we have FOMC, then I can see that this is our weekly low. For now, I'm bearish short term, and I think it's a matter of time till we take this liquidity. We have a big week with FOMC and stuff, so all eyes are on Bitcoin, and alts will eventually just follow Bitcoin. So you can always trade alts, but don't forget that Bitcoin is the king. The moment you think alts are independent is probably the moment that 5 minutes later Bitcoin shits the bed and the whole market goes with it. I made that mistake countless of times, so that's why I almost only trade, or like most of the time trade Bitcoin, because eventually everything does follow it. Yeah, it's like late in the week, it's indeed also full moon or anything. So, and together with FOMC, it could bring volatility. But also, like, I just don't trust this. If we do not take this and we, for example, go higher, I'm like 90% sure that if we go higher without taking this liquidity, that we're going to take it during FOMC. Because this is just asking to be taken. So the sooner we take it, in my opinion, the better. The longer we leave it behind, the bigger the chance is that we eventually get like a crazy wipeout to take out all this liquidity. So if you're bullish, I think you want to see this get cleared. Otherwise we go up and then eventually still get it. Especially with a big news event like FOMC, they can create this to trap people. maybe even leave it behind, but eventually they will take it. Matter of time. Okay. Thanks everyone for tuning in again.